Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. As you can see, we're on location today. We're at the Safe House, a precious metals vault in Singapore, and we're with the founder of the Safe House and Silver Bullion, Gregor Gregersen. Gregor is also the founder of Daenerys & Co., a company that provides institutional cryptocurrency storage for private keys. Gregor, thank you for coming back to SBTV. How are you doing?
Oh, very good. Thank you for taking me.
Sure, we're glad to have you back. Gregor, you were born in Germany. You spent quite a bit of time in Italy, so you have a very interesting perspective and intimate knowledge of the Eurozone. In fact, you've spoken a lot of times, or quite a bit of times, about the fragility of the Eurozone. How do you view the economic future of the Eurozone? Is it positive or somewhat negative?
Well, I'll be very worried about Europe in general. As you mentioned, I'm originally German. I lived about 8 years in Germany, about 12 years in Italy. I go back to Italy every year. My parents live there, and so I still have a lot of friends, a lot of contacts there, and so I sort of get a feeling on the ground, things that you're not going to hear from the news. And the stories you hear and the reality down on the ground is getting worse and worse, and most people don't believe them. I can give you some examples about Italy. My dad, he renovated a home, and the contractor who came to do the work, it's a small company, about 10 employees. He said this is the last year for him in Italy, and my dad asked why. He said, well, he spent the first 3 months of the year, working on police barracks along with some other companies. And the Italian government never paid him. And they didn't pay anybody else working on these, so the barracks ended up being half built somewhere. So they kind of left work and started looking for other work to make up the losses of not being paid. And 6 months later, they got letters from the Italian IRS equivalent, basically saying, you need to pay taxes on the money we didn't pay you. And when he points out, yes, I wrote an invoice, but you never paid me, the government would say, well, that's a different government department, that's not our problem. You wrote an invoice, we want to have taxes. So these are things which in most functional sort of systems you would not have, because it just means that nobody wants to work for the government in Italy because they're not paying and they want to have taxes from you. There are other stories out there which are just as bad. We had a good friend of mine, he had a real estate company, and the Italian government is saying that you guys are all cheating anyway, so I'm going to tell you how much revenue you have and how much profit you have. And you're going to pay taxes on that, because I don't trust anything you're telling me. And when you have a government going like this, of course everybody is going to cheat. So there's no trust either way. But in this case, they would come up with a formula. They would look at how many square meters of rental space you're having in your company. And they would say, based on your rental space and your past history, I'm calculating that this year you should have so and so much profit. And you're going to be paying taxes on that. And if you're telling me that's not true, I'm going to charge you the difference between what you're saying you earned and what I'm telling you ought to be earning. And that penalty might be higher than what you need to pay in taxes. So now you're putting these people in a position where they have to make up fake revenue to have fake profits so they can pay more taxes, because that's less than the penalties are going to do. So what do these companies do? They close shop. We had 5,000 businesses closing every day in Italy for a while when this law sort of became active. The whole situation has degraded to a point where it doesn't make any sense to start a business. The basic fundamentals of a working market-based systems are no longer there. And it's really only a matter of time, I think, until we're going to have a major crisis going out there, because unemployment in Italy for people below 30 is over 50%.
Oh my.
And oftentimes, if you're Italian, unless you have some good connections, you're going to have to leave Italy to find good work. So I'm extremely pessimistic about Italy. Germany also has some other fundamental problems. Of course, Germany is doing a lot better than Italy, but long term, I'm also extremely pessimistic, which is partially why I gave up my German citizenship. But that's more a longer term sort of thing. So overall, to come back to the main question, I think Europe has some fundamental structural problems which have been developed over the last 30, 40 years. They have been developed because politicians tend to do the easiest things they can do. They don't do what's good for the countries, they do what's good for the next election cycle. Right now we have a political party in Italy which essentially came in power by telling everybody, I'll give you 1,600 euros for free if you just vote for me. That's kind of the level we are kind of falling to. And almost none of the reforms that will be needed are really happening. The people who do work are being taxed to the point of absurdity. And the people which are getting free pensions and other benefits from the government, they're very active. Whenever a politician says, I might need to cut something, you can have up to 1 million people protesting in the street. And so this culture has developed where Italians are not lazy, but they have been, a system have developed over 40 years which is going to end badly. And I'm not sure you can reform it anymore. I do believe it really has to crash badly and for something new to come from the ashes, because it's so ingrained.
You use the word reforming. If, let's say, the governance within the Eurozone, if they were to deregulate, would that help the economy somewhat?
The whole thing is extremely complex. And I think we have to be careful to say, I don't want this, I don't want that, without knowing what people want. Because I think in England we have a perfect example of somebody saying, this sucks, this sucks, this is bad, but not knowing what direction to go. But there are some cases where, the EU rules and so on just make absolutely no sense. In our area, we live around Tuscany, the Tuscan Hills. And so olive oil is a big thing. So if you have 2,000 olive trees like we do, we actually get free money from the European Union. You don't have to actually pluck the olives. Just by having them, you get some money. So it's a classic example of everybody losing. And I think that's one example of what's really wrong with the EU. But I don't think, I think that Brexit, for example, has been an example of everything not to do. Just because there are problems with the EU doesn't mean that going out of it is suddenly solve your problems. It always comes down to the same thing. You have to have good leadership. And if you have incompetent leadership and you leave a non-functioning or not very well functioning system for something you don't know you're going to, it's going to get even worse. So essentially I believe Europe is in a big mess.
Sounds like it. Non-functioning systems, I guess that would lead me into the banks in Europe. They do seem to be in the news quite a bit for all the wrong reasons, and there is question as to their solvency. For you, having lived there for quite a number of years, what's your opinion on the banks within Europe?
Essentially, the Italian banking system is in huge trouble. We had 4 banks which went bankrupt, which didn't get reported much internationally, some of the smaller ones. But it was an example where most people lost their money. People who were keeping their money in a checking account, they will be insured up to, say, 50,000 euros or whatever it is. But if you put it on a certificate of deposit with the bank, which sounds kind of like the same thing, then it wasn't insured and you lose everything. Now, on a checking account or even savings account, you get almost no interest because to some degree we have almost negative interest rates for a while in Europe. So you don't get any interest, yet you have inflation. So basically your money becomes less and less. If you're putting a certificate of deposit, maybe you're getting 0.5% interest or 1% interest. So people put it in the certificate of deposit, which was not insured. When these banks went bankrupt, they lost everything. You had some Italian pensioners which committed suicide over it, and you got all these issues. But that was just a small taste of They're much bigger problems that you have in Italy. And my dad was just telling me last week that now he has some ex-local bankers which are saying, hey, how can I put my money in a German bank because they stop trusting, to leave their money in the Italian bank. So the Italian banking system is extremely fragile, and something is going to go very, very wrong. I think most people just don't realize how bad the situation on the ground is. So before Italy joined the euro, when I grew up in Italy, we had the lira.
Right.
I used to go to the coin op and put 50 liras into the machine to play my Pac-Man game back then. And over the years, instead of 50 lira, it was 500 lira. It was a lot of inflation, really. Yeah. Everybody was a millionaire. I mean, 1 million lira would be like $500 nowadays, or less. And then Italy joined the euro. Suddenly, the Italians cannot depreciate the currency. They cannot print as much money. And remember, when you have an inefficient system and you have to pay so many payouts to your people, to the welfare system and so on, you have to pay out a lot of money, which means you either make a lot more debt or you take a lot more taxes, which the Italian government is doing to a degree which is completely nonsensical now, or you just print more money, which they cannot do because they're part of the euro. Right. So what's the easiest thing for Italian politicians to do? It's to leave the euro. I'm not saying leave the European Union, not like what Brexit is doing. I'm just saying leave the euro as a currency so they can go back to the lira. Now, what does it mean for an investor or somebody who has money with the Italian bank? Well, it might mean that one day you have 100,000 euros in your bank, and then you have an extended weekend. And by Thursday, when the banks reopen, suddenly you might have 100,000 lira instead of 100,000 euros. And as soon as they open, the international markets will reprice the lira at whatever new rates that is, and it might be 50% lower. And it might keep on going lower because suddenly you no longer have that rigor and so on that you would have with the euro. And in some ways, I think it's a systemic change which has to happen anyway, right, because Italy is just not very competitive the way it is, and by having a low currency, you make things cheaper, and you can get things started again a little bit. But if you have your money in an Italian bank, or if you're Italian citizen saving it in a bank, you have got problems. That's why I always tell my Italian friends, keep your money in euro if you have to, in cash, not in the bank, or keep it in gold, which is a much better long-term investment anyway, or keep it in some other firm sort of asset, or take it out of Italy until that reset comes, because I'm sure it is going to come. Okay. And I think within the next 5 years it's going to happen.
Yeah, that was going to be my next question, where your views on the monetary union within the Eurozone, and if you think that if the euro is going to succeed or fail, or if the countries within the Eurozone may go back to their national currencies.
I think countries like Germany are very committed to the euro. When I was working in Germany, I was working as a senior business intelligence consultant for companies like BMW and so on. And one of my colleagues, he has a wife, he has a mortgage, he has 2 kids. And he had a well-paying job. By the time you pay so much taxes, he did not have enough money to go on vacation. He can just barely cope with these things, which means he cannot save any money, he cannot build any wealth for his retirement, which means he's fully dependent on the state pension, which is non-funded because it's a pay-as-you-go system. Basically, as people put money in, the money gets out. And so these are some of the problems with Germany. We might have much lower unemployment and might have a lot of relatively strong companies, but the German government is unable to tax big German corporate companies because they will just move somewhere else. So who has to pick up the taxation burden? It's the employee. And the government is very, very strongly discouraging you from making your own company. Even though they might claim we support entrepreneurs. And when I tried to do it in Germany, I was told I have to have at least 3 clients and I cannot work for any one client for more than a year. Otherwise, it will be a fake employer-employee relationship. So the government will come in and basically fine you a bunch of money. They're saying that you just became an entrepreneur to save taxes, because you can save more taxes being an entrepreneur than being an employee. The problem in Germany is you have a vicious cycle. When I moved to Singapore, the reason I moved here was many reasons, but one of the things that the government said here, we need to have a virtuous cycle. We need to have more investment, generating more savings, more investment, generating to better jobs and more wealth for people. In Germany, you have so much taxation that a lot of people are leaving. Yeah. When I was working at Commerzbank, big German bank, I had the opportunity to speak with one of the board members, 69,000 employees. He was a head HR for all these people. And he told me that 200,000 Germans are leaving Germany every year. And these are the people with the skills. And he was telling me to some degree the bank has to hire Germans outside of Germany because it's hard to get the right staff in Germany.
Germany, I'm sure it's the strongest country within the Eurozone, but yet it seems to be having to deal with a lot of handouts for different nations. And at the same time, it's losing hundreds of thousands of its own best employees to different countries year after year. What does Germany need to do to turn things around?
Well, about the handouts, the euro is sort of a mixed bag. I think for Germany it might actually be a good thing, because with the euro itself, Germany got a strong currency, but yet probably not as strong as it would be if Germany will be behind, like the D-Mark. So the fact that you have these, let's say, weaker countries there might have to some degree caused the euro to be traded lower than it would be otherwise, which is good for German exports, right? So, and oftentimes, we hear funny comments from countries like Greece saying, if it wouldn't be for us, the euro would actually be higher, and that will cause German export to be bad. So Germany is owing us money. Yeah. Right, which is a very funny argument, but these are kind of arguments which you hear. And unfortunately, there's also this culture about handouts, which just has become so prevalent in Europe. So how can we get out of this? I don't know. When I spoke with the board member I mentioned earlier, he said nothing will change until 5 minutes to midnight. Which, and I agree with this. The politicians in Germany, they seem really concerned when say, gasoline prices go up by 5%. They would immediately say, we need to pay more to the unemployed because gasoline price is more expensive now. But the people who work are not getting a pay raise because gasoline prices go up. Here in Singapore, Lee Kuan Yew, sort of the father of Singapore, he had this saying. He said, for any society, you're always going to have 10% of the people which are going to do well no matter what. You might be living in North Korea, but these guys have the connections, other ways to do pretty well. Then you got 80%, which is the bulk of the population. And these people, to a great degree, are going to do well or badly, depending on how the economy works, how the government is structured, what incentives they have, and so on. And then you have 10% of the population, which, whatever reason, there's going to be that 10% which is going to have problems. In Singapore, the idea is you try to concentrate on the 80%. You try to give these people the right incentives. You don't tax them much because you want to encourage work. You don't have a lot of regulations. You try to create an environment for business to create jobs, so there's plenty of jobs. It creates prosperity and so on. In Germany, it seems that everybody is focused on that bottom 10%. Nobody cares about the 80%. So what's happening is that bottom 10% is growing and growing because you're making work so unattractive and you're giving so many handouts, and you're setting the rules that if you ever do even a little bit of work, I'm going to take away that handout. So there's this mentality that you have to be happy to pay taxes. And so I don't quite see it changing. Right now it's politically incorrect to say you don't want to pay so much taxes. Germany has just swung too far towards the politically correct sort of pendulum, and that's what's causing the opposite reaction. That's why you're seeing more very right-wing, some people would say, resurgence of sort of very nationalistic, sometimes almost Nazi-like sort of parties coming back up, because it's a reaction to the pendulum being too far here. So what I'm afraid is this pendulum might go too far in the other direction. And I think that's something which we are seeing in a lot of places in the world, where we are having less and less centrist governments and things are becoming more and more polarized. So I hope things are going to get better, but I have a bleak sort of view of Europe. I think things are going to get worse before they're going to get better.
Yeah, it's unfortunate, but it does seem to be going that way. But moving from handouts to bailouts, 2008, just a little bit over 10 years ago, we had the financial crisis, and we saw governments bail out financial institutions with taxpayers' money. A few years back, the G20 met in Australia, and they actually authorized bail-ins. And a lot of people, they're not familiar with bail-ins, they might not have heard about bail-ins. Could you give our viewers a take on what bail-ins are? I
think governmental entities and boards and other features have looked at this problem and realized that we are going to have another financial crisis. And this time around, they want to be prepared. The idea is that you leave a bailout for the last resort, and your first resort is to do a bail-in, meaning that instead of taking the money from the government, you take the money from the depositors in the bank itself. So if you're depositing let's say $200,000, a bail-in will typically say that everybody has a certain amount of money which is protected, which normally is the amount protected by banking insurance anyway. So let's say the first 100,000, for example, will not be touched. Everything above 100,000, you will get, say, a 40% haircut or something like this, because that money is needed to basically bail out the bank. And the way that is done, that's something that has to be determined case by case. Right. Now, for you to make a bail-in, you have to act very fast, because for people who are in the financial system, when they are seeing that this bank is starting to become wobbly, then, and they act quickly, they can get that money out. Once the money is out of the bank, it can no longer be used for a bail-in. So if a bank starts looking funny, you need to very quickly freeze all of those assets for a bail-in to work. Right. That's why they had to have the conference in Australia, in Brisbane, right, with the G20. That's where a lot of these things were sort of set in place. And regulation and other things are there for these systemic big banks to essentially freeze assets right away, so that you don't have the smart sort of depositors take that money out quickly and end up avoiding being bailed in. At the end of the day, oftentimes it's just the smallest guy, who ends up paying most of the brunt of these things. But essentially, a bail-in is supposed to act so quickly that even the fast money cannot get out in time, and it's trapped there. But if you want to profit from this whole thing, or be sure about it, then what you need to do is you need to limit your counterparty risk. And the best way I found, coming out of the 2008 financial crisis, when I was in a trading room in one of the major banks, seeing it happen, is to buy physical gold and physical silver, because that's something you can own. It's not something that is being owed to you. If you do it right, you can own it. And that pretty much, gives you a lot of protection and a lot of security from a systemic collapse.
Yeah, we're, as you can see, we're surrounded by a whole lot of silver, some gold in the back. I'm pretty sure there are people who are interested to know, What were some of the stories that all of these people told you as to why they decided to go into gold, they decided to go into silver?
They are looking to put their money into gold and silver, not because they want to sell it next week or next month and try to make some sort of profit. They're buying it in order to have a kind of insurance. So that if a systemic crisis happens, if something happens, that part of the wealth is going to be safe. And it also is going to become more valuable, because once you have such a crisis, gold and silver will become in very high demand. Now, having said that, what people need to understand is that the price of silver and gold is not really determined based on physical supply and demand. It is determined in future exchanges by people who trade future contracts, which have a 9-to-1 leverage, and these exchanges typically only have 2 or 3% of actual physicals there. So what will most likely happen when we have the next financial crisis, which is what happened in 2008, gold and silver will actually fall. So, and people have to realize that, because as we have so much leverage. It's the New York Stock Exchange right now. We have about $600 billion of margin. People who borrowed $600 billion to buy more stocks. The more margin you have, the more volatility you have, the more people are going to lose when things go south. When you have that kind of margin, you're going to have a margin call. When things go down, the broker is going to say, give me more money. And if you don't answer fast enough, he's going to sell whatever you have. So they're going to sell your gold and your silver holdings, your paper holdings, which then means that the price of silver and gold is going to go down, because paper silver and gold is being sold. So what happened in 2008, the price of silver, for example, went from $13, $14 down to $9. But try buying silver in 2009 after the crisis at $9. It's impossible to get. Gold is also very difficult to get. And it is because the bullion dealers, which I went to in 2008, they were all sold out. Because the first thing people do is they end up buying the physical gold and silver. They take it home. And the demand for silver and gold, it just surges. And the supply are having difficulty sort of keeping up. And at some point, they will actually stop taking orders as well. So when that happened, you have a price discrepancy now, where the market will start pricing paper gold, which is just a liability, and because all these companies are going bankrupt, it might be worth zero. And physical gold, which is a physical item, which of course has value. And these two are no longer the same. And if you wait until the crisis comes to buy gold and silver, you're not going to get any. Which is why we have some customers who are actually buying physical silver and gold, and since they're getting, or they're ready to get a short position on gold when the crisis comes, so that they make money on the downturns and sell it when they feel that the worst of that crisis is over, and since it's going to be, a race. But that's what most people need to understand, that having silver in a bank account, in most cases on an unallocated basis or a future contract, is not the same as having the physical item. And in a crisis, that becomes very clear.
Okay. You personally, do you own physical silver?
Well, yes.
Do you own physical gold?
I would say about 70% of my assets outside of the company is in physical silver. I don't have much gold right now. I have a small amount, but that's partially because silver is so cheap right now. The gold-silver ratio, we are at about 83. I just can't get myself to buy gold when historically silver is at this low price. Once it changes, you can always sell the silver and get more gold. So, right now I'm very heavy on silver.
Gregor, why 70% in silver?
Putting it into silver is sort of a safe place, and allows me to sort of take care of my sort of day-to-day things. You could be investing in miners, for example, which might give you more leverage. If it's a short-term thing, you might want to buy future contracts, But sometimes these things are a bit like gambling unless you really know what you're doing. And I basically don't feel I have the resources or time to really figure out exactly what it is I'm buying. So buying the physical is something that I feel is a good, safe sort of investment. And it allows me that what I'm really doing is I'm waiting for a big crash. I actually do have money in some financial accounts waiting to short the market. Because I think that's going to happen. And when we have a big sort of crash or something, then I will have that liquidity, I will have that money to then decide, okay, now it's time to maybe buy stock A or stock B because it's crashed, because all these people have already had the margin calls. When I know that on the New York Stock Exchange we went from 600 billion in margin down to 100 billion or 50. Now I know, well, a lot of money has gone out. Now suddenly these stocks are much cheaper. If I can buy a stock at 1/3 the price, right? I just kind of wait. And at that point in time, when things are really bad, that's when I'm going to start looking and trying to figure out more, what happened and which companies are going to go under, which companies are likely not going to go under, and since the ones which haven't gone under, which can actually profit from this whole thing. Because we have to remember, in a capitalist system, right, in a free market system, you're going to have swings. You need for people to go bankrupt. You need for the bank companies to sort of disappear and the better managed companies to go in and take over those assets. And that's how you create strong companies. When you don't do that, look at Japan. Right? In Japan, you get all these zombie companies which sort of ended up retaining that non-functioning management, and there's no growth. Right? And so people talk about the lost decades of Japan because of these things. And we are doing the same thing in the Western world. We're doing the same thing with the banks. We're not letting the banks fail. Yeah. Because, to be honest, it's okay for a bank to go bankrupt. The problem is not a bank going bankrupt. The problem is the contamination to the other entities. So you can have the bank go bankrupt and the government still guarantee some of these loans. But why didn't we take that bank's management, kick these guys all out, and have new entities come in, fresher banks? We didn't do that. So we're creating zombie banks, really. So long story made short, I keep 70% as sort of, instead of keeping it cash, I think it makes a lot more sense to keep the money in silver or gold. Silver because I think it's undervalued compared to gold. And when things sort of crash, then I have a lot of powder, as Jim Rogers puts it, to buy, selectively what I feel is a good investment.
We've been hearing this question come up quite a bit. People, they're not sure whether they should be buying coins, whether they should be buying bars. Your opinion?
It's just a personal preference. The argument for coins oftentimes is if things get really, really bad and the government collapses, then having coins is an easy way to have more liquidity because it's a small item. So if you're keeping some coins, at home or close by, it's probably not a bad idea to have some coins. But for the clients which we have, which might be buying $3 million worth of gold or silver, I think oftentimes a bar, because there's lower premium, might make more sense. Or maybe buy $200,000 worth of coins and the rest in bars or something like this. Some clients just want to have coins because they prefer that. So it's mostly a personal thing. So I don't have a really strong feeling about it. From a taxation point of view, that can be a matter, but the taxation always depends on jurisdiction. So in Singapore, it does, basically both items will be tax-free.
Silver hits, let's say $200 per ounce spot price. What are you going to do? You're going to hang on to it? You're going to sell it? What's on your radar?
The problem is, did silver become $200 per ounce because silver suddenly became so precious, or is it because the dollar lost that value? Right. So in other words, if I have to buy if I can buy 10 cups of coffee with my ounce of silver, and silver goes to 200, am I still buying 10 cups of coffee? Or am I buying 300 cups of coffee with it? Right? So if we have a currency crisis, then measuring things in US dollars might not have as much sense as it might otherwise be. But having said that, I don't think I would look at it so much as what price I'll be selling on. I'll be looking more at where we are headed and why is it going up. If you don't understand why it's going up, then it's hard to figure out when you want to sell. Look at what asset will be low at that time, because maybe real estate is down in the doldrums.
Yeah.
So I'm not necessarily that keen on selling the silver for $200, but I might be quite keen selling that silver to get some real estate, because real estate might be something which might be undervalued at that time. And right now, silver by any measure is very, very much undervalued, I believe. So it's good to stock up on silver and then just wait. The thing with precious metals is, on the one hand, you can sleep well at night because they don't move that much and you own it. On the other hand, it puts you to sleep recently, because the last year it hasn't moved anywhere either. So you need to have a certain amount of patience. Understand why you're buying it. Like Jim Rogers when he was here, right? That's what I always tell people. Buy what you understand. Yes. And so if you buy something, try to understand it first, and then you will also sort of get a feeling when to sell.
There you go. Gregor Gregersen, we thank you for stopping by, and I'm sure people will appreciate your insights, and we'll see you all again. Take care, everyone.
That was Gregor Gregersen, founder of Silver Bullion and the Safe House, sharing his insights on Europe, silver, and gold. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. SBTV in audio can be found on iTunes and Spotify.